If you don't see the acceleration of what's happening, it's that moment that everyone seems to want to see where silver and gold take off. Yeah, it's coming. Whatever you're adding right now, you're not buying an investment in gold and silver. You are just moving from currency to real money. That the biggest money, most sophisticated money, the most well-informed money on the planet, the central banks, the commercial banks, the sovereign wealth funds, they have been copiously accumulating for the last several years, using the suppression of the Western markets to run cover. So do as they do, not as they say.
Silver has risen more than gold so far this year due to investors emerging from pandemic-driven safe haven buying. We expect the gold-silver ratio to continue narrowing in 2024 as technology drives demand for industrial silver. AndySchectman, president of Miles Franklin Precious Metals, anticipates a significant shift in gold and silver markets with an imminent value surge. Andy shares that a recent report shows that the economically viable silver reserves will be severely depleted in the coming years. The US Geological Survey, USGS, has publicly stated that the world's silver supply will be depleted by 2025. This will make silver the first widely used industrial commodity to have its in-ground supply exhausted. According to Andy, the world's largest silver miners, like Mexico and Peru, will also experience a decline in their reserves. Previously, the Institute announced that the expected production for 2023 is 1.055 million ounces, which will be largely driven by mining companies in Mexico. Production from silver mines is expected to increase 5% in 2023, the highest level since 2016. This growth will come largely from new silver mines in Mexico increasing production, along with higher byproduct production from Chile due to new gold operations with high silver content. Andy highlights the central banks rapidly accumulating gold and underscores the gold-silver correlation. Globally, central banks reported net purchases of 55 tons in July, according to the latest data compiled by the World Gold Council. Recently, the Gold Silver Institute tweeted, "Price moves in silver are more explosive due to the size of its market compared to gold." 90% of the upward moves in silver happen in the last 10% of the precious metals bull market when retail investors jump in. Now, we are presenting the clips of Andy's insights from his recent interview with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I just read a report just yesterday, last night, that silver is disappearing, and it's estimated by 2028 the Earth will have primarily run out of at least economically mineable silver reserves. That's coming from a branch of the US government, the Geological Survey Committee or whatever their name is. But you got the branch of the US government saying that by 2028 to 2030, we are very close to exhausting the economically viable mineable resources. And that's because it's found very near the surface in a form called epithermal. Like your skin is epidermis. The big deposits were found long time ago. They're saying Mexico will lead the charge in that. Mexico and Peru, traditionally the biggest silver miners in the world, they're running out of silver. The world is running out of silver at the same time it is being massively accumulated by the big money. And the trolls out there saying, oh, bullshit, I can find it. It's cheap. It's everywhere. It's really a weird situation, and it's almost schizophrenic. And I guess the power of the word, the power of the media, rhetoric, and price, they are misdirecting the public to such a massive degree as the biggest money in the world is pickpocketing what is left either above ground or in the ground. And this is a trend that I think, again, we can use the term logarithmic decay. Little by little by little by little, then bang, people wake up and say, where the hell is all the silver? And guess who's going to have it all? The central banks, the commercial banks, the producers, all of it. There's one other thing to throw into this mix. And I want people to think of the tier one revision of gold, where the Bank of International Settlements reclassified gold as the world's only other tier one reserve asset. And you see the central banks using the Western suppression accumulate more gold over the last 18 months than they have ever in the history of central banking. What What is interesting about that, and I think you can transition to silver, because remember, gold and silver have a 90% correlation nearly throughout all of history in terms of their movement. It may not be perfectly symmetrical. Typically, gold goes first, and then silver in a percentage basis goes further. But understand this, for the very first time in 45 years, the treasury market are no longer the safest alternative. In fact, for the first time in 45 years, US treasuries are now have a higher downside volatility than gold for the first time in 45 years. And it's just by a little bit. But understand that since the end of World War II, US dollars and US treasuries were tier one. In 2019, the BIS reclassified gold in that manner, as if it is non-encumbered, if it is physically held. And it's interesting to see things start to roll as you see shifting dynamics, I think, of capital moving away from the equity market and the fixed income holdings. And I think you're seeing people look to precious metals and commodities and hard assets as a go-to.
During the interview, AndySchectman warned that mainstream ignorance of gold and silver value may lead to government acquisition, as seen in Tanzania. Tanzania has started buying gold locally as a way of boosting its foreign exchange reserves, the central bank said on Monday. Gold is a leading foreign exchange earner for Tanzania, bringing the country $2.91 billion in the year to end June from $2.69 billion a year earlier, according to central bank data. Meanwhile, Andy highlighted a surge in money market funds and predicts a banking-related event that could rapidly reshape financial markets. The recent bank failures underscore the need for banks to reevaluate their treasury and risk management practices. The rapidly changing macroeconomic climate and vulnerabilities in business models highlight the importance of diversification and risk hedging. Let's get back to the interview.
I think that there is the people who are holding gold right now and silver right now, by and large, are strong hands, as strong as they can possibly be. They have weathered the storm of volatility. They have weathered the storm of counterintuitive rhetoric. And they've listened to people like yourself who have explained eloquently the fundamentals, the rationale, and what the market has done. To your question, to your point, what you're hedging at is that the mainstream has no idea, and they've done a good job of keeping the mainstream disinterested. But by this point, if you've been holding gold and silver for the last several years, or as long as I have, or as long as you have, you understand what's happening. And if you are paying attention to what's happening on a geopolitical scale, it becomes easier to trust your gut and to have strong fingertips. And so, no, we see very little in the way of selling. If anything, we see people trading gold to silver, if you want to call that selling gold. But we don't see anything in the way of people selling gold and silver, very, very little anyway, and repositioning into other asset classes, perhaps to use it for things they've planned. Other than that, no, it is a very, very, very small part of the industry right now, and rightfully so. I mean, this is the time it should be accumulated, at a time when risks around globally, geopolitically, economically, have never been more important. And quite to the contrary, I sometimes wonder what the hell the mainstream is thinking. And then I say, well, they have done a pretty damn good job of suppressing the reasons to own it, to making it very difficult to see from the mainstream. And if you don't spend time looking at alternative media sources like yourself, most people would walk right by it and wouldn't see it. And that's by design. And by the time people wake up to the reason to own gold and silver, not only will the majority of it all have been gobbled up from the top on down, but just like we saw in Tanzania this last week, they have started to buy their local gold to bolster its foreign reserves. So you're going to see nationalization. What's interesting that a lot of people aren't talking about, we've seen $1 trillion move into the money market accounts, $1 trillion. And at the same time they implemented bail-in legislation, they implemented money market gating, which is just what it sounds like. If the shit hits the fan and everyone tries to yank their money out of the system, you will be gated in a large majority of the money markets, not all of them, but certainly the prime money markets. And, it's a situation where it will just take some event. And I think it will center around the banks and a bank being bailed in to wake people up. And premium is a function not only of production, turning a blank piece of gold or silver into a coin, putting it into a tube, into boxes, and shipping it out, and the cost associated with running the mint and whatnot. But for the past 3 years, premium has been a function of demand. And while we've seen an increase in demand from the majority of my career this year, which is even better than last year, which I thought was impossible, the market or the industry geared up for it, but not to what we expect. And I guess that's why there's a lot of product at very fair premiums. But one event, and I know it's coming. In my soul, I know it's coming in the banks, and that's when you'll see things change at the blink of an eye.
The precious metals market is experiencing notable shifts and potential supply challenges in the current situation. According to the Commission's report, inflation and a weaker dollar boosted the price of silver during 2Q23, and as the dollar is expected to weaken further this year, silver is expected to continue to benefit. How might the depletion of silver reserves impact industries reliant on silver and boost the gold and silver market? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more exciting topics. Thank you for watching.